what I look at, the most important thing for us is market share of the firm. Not only the current market share, but the incremental market share. What are the competitive advantages that are helping them gain or lose that market share? That's the first and the most important thing. Second important thing for us is how well is the business run? What are the attributes of the management when they look at capital allocation? What do they like in business? Are they trying to make it an organization, a business, or are they just trying to make a quick buck out of it? And third, and the most important thing for someone like us, is how they treat minority shareholders, because an unfriendly promoter, even running the best of the business, will be very bad for a minority shareholder if he decides to do so. So these are the three most important things we look for in a company. So the company I'm going to talk about is a market leader, and its pace is growing probably at the same pace as the leader or slightly better. It has all the competitive advantages that should make it one of the most lucrative businesses to own in terms of capital allocation, in terms of return on capital employed these guys generate, and the cash flow that they're managing. So not going to give you too many hints apart from this, but it's an extremely well managed business available at a very reasonable valuation. So a tough question to answer, but if I had to pick only one book, it would be Common Stocks, Uncommon Profits by Philip Fisher. It talks about so many good things in terms of what an investor should look at in a company, why they should not sell a great business, why, and it's especially applicable to Indian markets, the way they are structured today. So it's a book which is a read and a reread for a professional investor, probably once a year for sure. Actually, I've got a couple of advice for them. There is no doubt in my mind that equities is one of the best asset classes to build wealth and capital, but it can be extremely dangerous if you try and do it on your own without proper research and half-heartedly. So the idea, if you're not good at it, or if you do it part-time or half-heartedly, the best part would be to give that money to a professional money manager at a mutual fund or a PMS, whichever you suit worthy. And this equities really have the power over a longer term to change someone's life. So those are the two things I would want to leave your investors as a thought, as a parting thought.